Well, welcome back to Managerial Accounting. The purpose of this little mini lecture is to review these solutions for the take-home part of exam number 2. You all got your exams back at this point, and you'll know on the cover page, I gave you the number of questions correct divided by 32, and that would have multiplied, set up a fraction, multiplied that by 50%, and that gave you by 50, and that gave you the number of points you got on the multiple choice part. And then there were 5 take-home problems. Each take-home problem was worth 10 points. So if you got each problem correct, fully correct, you got 10 points. If you got less than 10 points, you would have seen that on the cover page, and I would have provided you an explanation. And this little video explanation should further help you if you had some places where you kind of want to stray here. Okay, so the first one. First one is pretty straightforward. We have to determine the proportional percentage of usage of the janitorial department by cafeteria cutting and assembly. Okay, the company uses the sequential method, and you can see here that janitorial services are allocated under the cost driver as square foot. So what you need to do is you got to allocate janitorial to cafeteria cutting and assembly, and it'll be done on the basis of square footage. So it's 20,000 for cafeteria, 4,000 for cutting, and 16,000 for assembly. So if you set those up, you get 50% goes to cafeteria, 10% goes to cutting, and 40% goes to assembly. How did we get those? We took the square foot of those departments and divided it by the total of all the square footage. And that gives you those various percentages. So it's 50%, 10%, and 40% is your correct answer. And that's done on the basis of the square footage. And it's the sequential method, so you're going to allocate janitorial to cafeteria cutting and assembly. And then if this problem was extended further, then you would allocate cafeteria costs to cutting and assembly on the basis of the number of employees. So those are your answers. A is 50%, B is 10%, and C is 40%. The next one was pretty straightforward. I highlighted it here. They wanted you to allocate these joint costs on the basis of net realizable value. And they told us the net realizable value of face cream is $7,500. Net realizable value of body lotion is $3,500. And net realizable value of liquid soap is $4,000. A couple of you went ahead and started to figure out the market value of each, but you basically what you want to do is the net realizable value, and net realizable value is calculated by taking the market value minus the additional costs that are necessary to sell it. But here they went ahead and told you what the net realizable value was. So what you had to do is just allocate on the basis of these, get the total net realizable value. So it was the total of 75, 35, and 4. And then your numerator there is the net realizable value of each item. So face cream is 7,500 divided by the total. Body lotion is 3,500 divided by the total. And liquid soap is 4,000 divided by the total. You get a percentage. The total joint cost was 200,000. So your allocation is 100,000, 46,000, and 54,000 on the basis of net realizable value. Next one is pretty straightforward. This is a simple break-even. Break-even is fixed costs divided by the contribution per unit. Contribution per unit is the sales price minus the variable costs. So we have fixed cost for the first one. Compute the break-even for the current year, round to the nearest whole number of units. So you get fixed costs of 188,500. They told us that we have a sales price of $70 per unit, and that the cost for the current year is $5,150. So 188,500 divided by 70 minus 5,150 gives you the 10,189. And then they say compute the break even for the coming year, assuming that the wage contract is signed. And the new wage contract is going to increase the variable cost to $55.50 per unit. So your contribution per unit goes down. So your break-even point goes up. So it's now 188,000 divided by the difference between 188,500 divided by the contribution per unit, which is now 70 minus 5550. So you get 13,000 units. Next one. For its first month of operations, that's important to know it's the first month of operations. So we sold 2,600 units, and we have 4,400 ending inventory. So it's the first month of operations. We would have had no beginning inventory. So the total number of units manufactured must be 3,000. So this is on the basis of absorption costing. So under absorption costing, the cost of goods manufactured and the ending inventory is going to include fixed costs. And the selling and administration expenses include both fixed and variable costs. So they tell us a few things here. They tell us the fixed manufacturing costs were 42,900. So the cost of goods manufactured includes 42,900 of fixed costs. So when you get the variable costs, you got to reduce the 85.5 by 49.2. And selling administrative, the variable selling administrative expenses were 14,600. So the selling administrative expenses, this 21,500 includes fixed costs, which would be the difference between 21,500 minus the 14,600. So you want to prepare a variable income statement. So let me scroll down to the bottom here. You got to do some calculations. You got to come up with the variable cost of goods manufactured. So the variable cost of goods manufactured is the total cost of goods manufactured minus the fixed cost, gives you 42,600. Then as far as the variable cost of good, the variable cost per unit is 42,600 divided by the 3,000 units manufactured, gives you a unit variable cost of $14.20. And the fixed selling and administrative expenses were 21,500 minus the variable component, which was 14,600, which gave you 6,900. Now that I've done those calculations, I can now do my variable costing income statement. So the variable cost of manufacture was given at 42,600. The ending inventory, we had 400 units times the 1450, which is the variable cost per included in inventory. So that's going to give us the variable cost of goods sold. The variable cost of goods sold from sales is going to give us the manufacturing margin. Subtract out the variable selling and administrative expenses, and that gives us our contribution margin. And now you have to subtract out the fixed costs. So the fixed costs were 42,900 manufacturing and selling administrative 6,900. So what we have here is the absorption costing actually gave us a higher net income than the variable costing. We know that's going to be the case whenever you have an increase in the inventory. Absorption costing is going to give you a higher net income than variable costing. Right? So in order to get these computations, you have to the cost of goods sold under variable costing only includes the variable, and so you have to subtract out the fixed costs, and you have to figure out the value of the ending inventory is the variable costs in each unit multiplied by the number of units, and then this the fixed selling administrative expenses would have been the total selling and administrative expenses minus the fixed portion. Okay. And then the last one here, this hopefully the little job aid that I gave you was a little useful here. The tricky thing is that first thing I would do is I would figure out all the inventories. So they gave you beginning inventories of finished goods. They gave you beginning inventory of work in process, and they gave us beginning inventory of raw materials. And then they gave us ending inventories. They call it desired ending inventories of finished goods, work in process, and raw materials. They told us what the purchases were, they told us what the direct labor was, and they told us what factory overhead was. On the basis of that, prepare a cost of goods sold. So remember I said set up 3 columns here. So you're going to start in the right-hand column with the beginning finished goods inventory. To that, you're going to add the cost of goods manufactured, and that would give us the cost of goods available for finished goods available for sale. Subtract out the ending inventory of finished goods, and that gives you a cost of goods sold of 944. So the tricky part here is to figure out the total cost of goods manufactured. So to do that, you take the beginning work in process, then you have to figure out what's the amount incurred for materials, labor, and overhead. So for materials, it'd be the beginning inventory of raw materials, plus the raw materials purchases gives us the raw materials available for use. Subtract out the ending raw materials, and that gives us the cost of materials placed into production. Add to that direct labor, add to that factory overhead, that gives you my total manufacturing costs. So here's my beginning work in process, here's my total manufacturing costs. So that gives me the total work in process during the period. Subtract out of that the ending work in process, and that is the cost of goods manufactured. Okay, so that's it. So I hope you found that little review useful. You all did, just about everyone did really well on the take-home part of the exam, where people tend to struggle with the multiple choice. So I would say for the next exam, put the same effort into the take-home, but certainly spend more time with the adaptive exercises for each chapter, the multiple choice questions at the back of each chapter, and the practice multiple choice questions as well, which are there for you on Brightspace. Okay, so enjoy your Thanksgiving holiday and give thanks for all the blessings you got in this world. I give thanks for all of you, and I hope you have a good holiday, and we'll see you later. Or after Thanksgiving. Au revoir, hasta luego, auf Wiedersehen. Take care, folks.